Good morning and welcome to Join the Dots. It's been quite an impressive week, hasn't it? For gold, for silver, for all the things we've talked about. And again, why? Because all the dots are joining. All the dots are joining. And please go back through this catalogue of videos that I presented to you, because in the early days only 200, 300, 400 people were watching them. Yet the points were just as important, just as valid, and they're now coming to fruition, the modern word. Everything is going to link, everything. And just to show you some headlines which sort of encapsulate that. The IMF and the Bank of England warn that the AI boom risks a market correction. Now, they don't say things like that unless they know it's coming. They don't warn you of risks unless they're coming, okay? Because they don't like to be wrong. So it's a fact. Take it as a fact. It's only timing now. What do I say about timing? Gambling. Timing is gambling, okay? So what else did we see? We see central banks. Oh, lots of headlines out there now. Foreign central banks holding more gold than dollars. Well, yeah, because the gold's gone up double, hasn't it? Treble in the last 4 years. Okay, yes, they have bought some more, but don't buy these instant headline designed to shock or impress you. Clickbait, yeah? Yes, they're holding more gold than dollars now because the gold price has shot up. It's not difficult. Look through the noise, all right? We haven't seen anything yet in terms of what they'll eventually hold versus the dollar. Okay, this is just the price move in gold, no more, all right? Euro-dollar University, I'm just doing these quick fire. Euro-dollar University, this morning, the episode, very good one actually, talking about how New Zealand has been... Now, New Zealand is the canary here, okay? New Zealand, in my view, is the canary. You're seeing house prices falling rapidly in New Zealand, okay? You've seen the central bank panic, cut rates into July, and then worry about inflation, stop cutting rates, and now what do they do in October? They cut by 50. So in July, they were totally happy that everything was fine. Why? Because they got the tariff rebound, didn't they? Okay, and now of course that unwinds. What do they end up with? They end up with more unemployment. Their unemployment is looking very bad. They end up with a slowing economy looking very bad. So now they do a 50-point cut, having said in July we don't need to cut anymore. This is going to be the pattern, all right? This is the pattern, and central banks are just bloody useless at the end of the day. They're useless. Okay, now Greg, I just want to do this before we go into our main piece of today, which is Francis Hunt again. But this time I think Francis hits so many nails on the head. It's just a superb piece. And he talks about some very profound relationships. S&P gold, Dow gold. He talks about the Japanese carry trade. I'll come on to that in a minute. But just some headlines from Greg. Greg did 2 excellent pieces of work in the last week. He called them the Snap, Part 1 and Part 2. And it's about the credit market snapping. And it will. It will. That's the biggest dot out there. The credit markets will snap. Okay? And he goes through some things. He says, get out of the system. Do not have your money in the banks. Just keep as much money in the bank as you need to pay your bills. The rest, put it somewhere safer, because the banks will not be safe. Get your money out of their system, out of their control. Get it under your own control. Be your own central bank. He said this for years. I've watched him for over a year, and he's always said, be your own central bank. Hold gold, hold silver, okay? Do the things that the central banks are showing you they're doing, because they need to, all right? He said that the credit stresses are now flashing red, and the junk bond spreads are starting to widen now. Now, before, up to maybe 2-3 months ago, they were actually narrowing as the greed, or rather the selling to the public greed by the institutions, meant that spreads were widening because the quality yields were coming down, and so the junks chased them. Now the junk's widening again. Be careful. It's a huge red sign flashing. Okay, there's a funding strain at the moment in the system. We know that. What else? Yeah, the shadow, the standing repo and the reverse repo, both in trouble. That is a huge sign. Okay, it's a huge sign. When the repos struggle, the system struggles. Weak treasury cover, well, they've had that for quite a long time now, but again, it's an interesting point. And the regional banks starting to merge. There was a regional bank merger in the States the other day. That is another sign that there's problems in the system. And the Fed will be very busy trying to organise mergers between failing banks. So you get the failing banks and the flailing Fed. As I say all the time, once they start to fail, the politicians flail. Right, market sniper. This is a classic piece, okay, and I will link it. And I'll only link that because I want you to concentrate on it. It's an hour. But Francis is very entertaining. And not only is he entertaining, he's brilliantly informative. The first 2 or 3 minutes is the true big picture stuff. You need to really understand those first 2 or 3 minutes. At 7 minutes, he talks about the S&P relative to gold, and 2000 was an absolute high, of course. Okay, because gold was high, S&P. This time, it's nowhere near it. Gold is nowhere near that high that it found in 2000, and yet it should be a lot higher. If you think about the dynamics, it should be a lot higher. 8 minutes 30, Francis goes into a deep dive on the historic one, Dow to gold, and he has so many angles on this, so many chart angles. You have to watch it. You have to watch it, okay? Look how low the Dow is in gold terms. 9 to 40 minutes, the history of Dow Gold. You need to watch this, okay? 15 minutes, here's the bottom line. We are set to hit less than 1 ounce buys the Dow. Now, what did Greg Mannarino say for the last year? He said at the end of all this, he sees Dow 8,000, gold 8,000. There you go, 1 ounce buys the Dow. It's exactly what Francis is saying now after 15 minutes of his presentation. Only the AI bubble has stopped the descent, but it's a mere bear market rally, nothing bigger, because it's false. And as I've just explained to you, both the IMF and the Bank of England are warning that there's going to be a massive market correction when the AI bubble, and everyone knows it. Everyone knows the AI bubble is a bubble. So anyone going into it now is purely gambling. Gambling. Because you're banking on the timing suiting you, and it will not, because that's how the market makes money, it's how the market makers make money, it's how the institutions make money, and it's how the public lose money, because the public gamble and the institutions sell into it. Okay, and it doesn't matter when it goes up another 20%, and what do I care? How far has gold moved this year? From 2.6 last Christmas to 4,000 now. What's that? 14.26, 7/13, well over 50%. Okay, well over 50%. What's the Dow done? What's the S&P done? Really, truly. Most of the fact that people don't do anything is because they're too lazy. They can't be bothered to go in and change their portfolio within their 401 or their SIP or whatever it is, whichever country they're in. They can't be bothered, and as long as it's going up with the S&P or the Dow, they don't care. They don't care, but they should care, because this is going to be very, 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 very different. Oh, hello, friend. This is my stray. We call him Fugly. Most of you can work that one out. Right. Now, you've really got to prepare for what's coming. Okay? As you go through this market sniper piece, it gets more and more and more consequential. Metals and miners. We are in the turbo of all turbos. Okay? So, again, use gold as your measuring stick. Don't use the dollar. Okay, use gold. So what price is the Dow relative to gold? What price is the S&P relative to gold? You will see that they're all falling because gold is rising faster. And it's only lethargy or apathy that stops people moving from their stock portfolio to a metal portfolio. And what are the the experts. What are the experts saying now at Morgan Stanley? Jeffrey Gundlach, Ray Dalio, 15 to 25% gold, depending on which one you listen to. 15 to 25%. How much do you have? How much? Be honest with yourself. Take all your investments, all your pension, put it all together, put it on a spreadsheet. What percentage have you got in gold, silver, miners? You know the numbers coming out of our friend Francis here. He's talking 50%, isn't he, in gold, silver and miners. Okay, so he sees the Dow going to 1-to-1 gold, exactly what Greg has said. Top 20 days, he sees everything going parabolic now. So he says the top 20 days in this move will be 80% of the profits. 80% of the profits. So it's very, very dangerous to try and get out on a dip and come back in again, because you can miss 80% of the profits. Because once it starts moving up again, you say, oh, I'll just wait. I'll just wait. No. I'll just wait. It'll come back. Gone. It's parabolic. It's not in control. Okay, no one can manage this. It will do what it does. He calls it the bull of the ages. 80% of the move made on the last 20% of the journey. The greenest field is metals. No need to look anywhere else. Bullion is his first choice. And spread the jurisdiction of assets. Now, I've said that from day one, haven't I? I said, be very careful with your miners. Make sure that you're buying mines in the right and safest jurisdictions. Don't be lazy and just listen to Jim Cramer telling you to buy Barrick, which then has its mines in Mali seized. No, don't be lazy. Do your research. Follow Rick Rule, follow Clive Thompson. These people are telling you how to look at the miners. And I've told you before anyway, haven't I? I've said, be careful of the jurisdictions. Look at where they're mining. Okay, the Americas are probably the safest areas, barring Venezuela, of course. All right, so that's enough today, because I know I'm being told I'm way over time now, okay? Please, I'm going to link Market Sniper. This is an hour that you should invest your time in. It's huge. And the talk about the parabola and the parabolic rise is so important. Because an awful lot of people, I had some people asking me earlier this week, oh, it's dipped, why is it? Oh dear. It doesn't matter, buy it, buy the dips. We're on a journey, buy the dips, okay? Thank you very much. And please, before I switch off, please subscribe. We are so close to 10,000, okay? And please share with anyone you know that you like and you want to help. Please share it, because we're giving you, and you can see it over the last 3 months, we're giving you some incredible information, and already we're showing incredible results. So please subscribe, share, and have a great weekend. Thank you very much.